Welcome to The Explainer. Today, we're talking about something huge, a collision that's really shaking the foundations of money itself. You've got centuries of financial tradition on one side and a decade of digital rebellion on the other. Let's get right into it. So you have the old school world of traditional finance, right? And then you have the disruptive, born on the internet world of crypto. For years, they kind of circled each other, but now they're colliding head on. Today, we're going to untangle that chaotic and, frankly, absolutely fascinating story. To really get what's happening, you have to look at the environment where this collision is taking place. And right now, that environment is basically a market that is on fire. It feels like almost everything is just rocketing up. Let's just start with a number, $4.75 trillion. That is the insane market cap of just one company, NVIDIA. This isn't just a tech rally, It's a sign that a tidal wave of cash is flooding the market, pushing pretty much everything to dizzying new heights. And look, this frenzy isn't just happening in high tech. Check out old school stuff like commodities. Silver, a classic safe haven asset, just smashed through $50 an ounce. That's an all-time high. It just goes to show you this is a broad surge of confidence, from AI chips all the way to precious metals. So what's the logic behind all this buying? Well, this quote from Bank of America pretty much sums it up perfectly. That classic fear of, buying at the very top. It's like, it's just vanished. The feeling out there is that the momentum is just going to keep on rolling. It is a risk-on world for sure. Okay, so in the middle of all this market madness, this is where the truly seismic shift is happening. After years of being on the sidelines, traditional finance is making its grand entrance into the world of crypto. The outsiders are finally coming inside. And we're not just talking about a few adventurous traders here. We are seeing major institutional adoption across the board. I mean, a giant like State Street is reporting that most of its clients are planning to buy more crypto. Even sovereign wealth funds, some of the most conservative, careful investors on the planet, are now putting their capital to work here. And believe me, we are not talking about small, experimental little bets. The scale of this is just staggering. BlackRock, the biggest asset manager in the world, now holds nearly $100 billion worth of Bitcoin in its new ETF. That's a fund that lets literally anyone buy Bitcoin just like it's a regular stock. And that is a level of validation that many thought was just impossible a few years ago. But just as Wall Street is giving its big stamp of approval, we get a very sharp reminder. Crypto has not been completely tamed, not by a long shot. Its wild, volatile nature, oh yeah, it's still a huge part of the story. Here is the other side of that coin. Imagine this. In a single hour, $100 million can be completely wiped out in liquidations. That's when people's high-risk bets go wrong and get shut down, fast. This is the kind of extreme volatilities that traditional finance just isn't used to. It's a high-stakes game where fortunes are made and lost in minutes. So the big question is, how do you bridge these two worlds? How do you possibly marriage the stability of institutions with the raw innovation of crypto? Well, a lot of very serious players are now working on building a much stronger foundation to make that happen. And it's really happening on three key fronts. First, there's policy. You've got lawmakers trying to make crypto more practical for just, everyday use. Second, infrastructure. We're seeing regulated exchanges pop up, creating safer gateways for big money to flow in. And third, the tech itself is getting a major upgrade. We're talking huge reductions in those annoying transaction costs, the gas fees, which makes the whole system dramatically cheaper and more efficient to use. And it's so important to remember the big vision that's driving all of this. For proponents like the CEO of Coinbase, this isn't just about creating a new asset for Wall Street to play with. The ultimate goal here is a revolutionary one, to build a more open, a more fair financial system for everybody. So, where does this great collision leave us? I mean, what happens next? Let's take a little peek at what some of the most influential players from both of these worlds are predicting for the future. All right, coming from the very heart of traditional finance, the head of the New York Fed is signaling that interest rates might be coming down. So, why does this matter to you? Well, because lower rates on your savings account often push investors to look for better returns somewhere else, and that can mean driving even more capital toward assets like crypto. And this forecast, this one from Deutsche Bank, is maybe the most stunning of all. They are predicting that the world's most conservative financial institutions, I'm talking about the central banks that manage entire economies, could become major holders of Bitcoin putting it right alongside gold as a core reserve asset. Just think about that for a second. Which brings us to the final and really the most critical question. As these two massive forces merge, which one is ultimately going to shape the other? Is crypto just going to be another asset that gets absorbed into the old system? Or is it the catalyst that will fundamentally remake finance as we know it? That, right there, is the story we'll all be watching.